Hello, I'm Troy Harmon. This is Nick Antonucci, and we are here with your market update from Henssler Financial for December 2017. Nick, housing numbers all look good.
Yeah, as they have for some time now. We got the latest Case-Shiller home price index came out and showed home prices are up 6.2% year over year. That's about what we saw the previous month. Now, keep in mind there's a 3-month lag on this. So this is covering data through September of this year.
Yeah.
So as we move through the rest of the year, hopefully we'll continue to see that with both new and existing home sales up month over month.
Sure.
I think existing are still down year over year. But nonetheless, yeah, housing still looks strong as it has for some time now.
Yeah, another strong point, GDP, 3.3% in our latest revision from the 3%, which was a bigger number than expected for third quarter.
Yeah, and the biggest contribution to the upward revision was an increase in consumer spending, which was really the big negative, if there was one, in the initial report. We didn't see consumer spending contributing as much as we would have liked to have seen. Strength in the consumer obviously is going to lead to stronger economic growth, and we're starting to see that. You know, you're seeing that data through retail sales, which was still up for the month. Not as much as it was in September, but in October we still saw a 0.2% increase, and that's coming off an almost 2% increase, the best monthly number we've seen in a while in September.
Right. Speaking more, the consumer sentiment's been great lately. I think we got a number better than our previous high, December 2000. So
this is the Conference Board number. Obviously, we have a couple different organizations that report consumer confidence, but this saw both views on existing conditions and attitudes towards the future, both blowout numbers. This is the highest consumer sentiment reading we've seen in like 17 years, Troy.
Sure, yeah. Numbers absolutely great. The other piece is inflation. We watch this close because we think this is going to be the wet blanket that is ultimately thrown on this party.
Sure.
But lately we haven't seen huge problems with it.
No, we really haven't. Headline consumer price index rose 0.1% in October. You saw core prices, which is really when you strip out the volatile food and energy components, rise 0.2%, and year over year we're at 1.8% on CPI.
Yeah, we've looked at the PCE deflator, which is actually used by the Fed. It's about 1.4%, so even better than that. And inflation's low. Things are doing well.
Yep.
Looking forward, we've got some points we'd like to talk about. How about tax reform?
Yeah, so obviously you're watching this post the passage of it, but both the House and the Senate have now approved their tax plans.
Right.
Now we have to come together and
make it one, a unified tax
Exactly.
plan. Yeah.
Kind of the highlights are you're going to see the corporate tax rate drop to what, 20%?
Right.
You're going to should see some simplification for the individual tax brackets. Hopefully we'll see a little fewer. I know the Senate plan I think still has 7.
Right.
The House plan has
4.
3 or 4. Yeah, 4 sounds
4,
right.
I believe.
There's differences in standard deduction. I believe that's going to double. So there are many things you should definitely read into and understand what is possibly changing. But in the meantime, we're going to look at what is the finalized plan that they're aiming to have on the president's desk to sign by the end of the year.
Right.
But what does that mean for companies?
Well, obviously, lowering of a tax rate is beneficial to those companies that actually pay taxes, especially those that have been paying, the maximum amount.
Right.
And it also means good things for investors, right?
Yeah, absolutely. And I think we've seen that just in reflection in the markets of stocks moving higher.
One of the other points, talking about the Fed, we look at options implied probability at about 98.3% that we'll have a rate increase in December 2017. So we're looking ahead for 25 basis points, 0.25% added to the overnight lending rate between the banks.
That's right.
Which usually kind of anchors the rest of the yield curve as these costs of borrowing increase, then you would see a little bit of higher spending, I guess, for that interest for corporations. Takes the profits down a little bit, but I think overall we're nowhere close to worrying about the slowdown.
Yeah, not at this point. I think 2 other things to watch on the topic of the Fed is forecasting 3 additional rate hikes in 2018.
Right.
Whether or not that comes to fruition, who knows? We've heard that past years, particularly this year. I think they're forecasting 4, and this will be what, our second?
Yes.
Second in 2017.
Yes, it is.
And the second thing to watch for is in February, Janet Yellen's term will end. Jerome Powell will step in as the new Fed chair, and so we'll be watchful kind of the actions he takes early on in his role.
Going forward, kind of tying all this together, maybe a 30,000-foot view of the markets and what we expect. You know, inflation's low. It's leading to good corporate profitability. That profitability is giving us a benefit in the stock market, so investors are happy.
And that profitability is being aided by the tax reform.
Absolutely,
you can see a 5 to 6% increase in earnings as a result of the reduction of the corporate tax rate.
Sure, yeah. It seems strange that it comes at a time when we look backwards and think, oh, the market's really appreciated what's next. It's strange to me investors worry at the weirdest times. But looking at the fundamentals, there seems to be plenty of reason for people to still be positive on investing in the stock market.
Sure, I agree.
Yeah. All right, that's been your market update from Henssler Financial for December 2017. Thank you for watching.